Good morning, everyone. Welcome to all our guests present today in Montrouge, as well as those joining us virtually. It is a pleasure to have you with us today for Crédit Agricole SA Investor Day, hosted by Olivier Gavalda. Before we begin, let me briefly outline today's agenda. We will start with a 1.5-hour presentation, and this will be followed by a 1-hour Q&A session. Participants in the auditorium will be invited to ask their questions directly, and those attending online may submit their question via the chat. But without further delay, please join me in welcoming Olivier Gavalda, Chief Executive Officer of Crédit Agricole SA.
Thank you, Cécile. Good morning and welcome everyone. I'm very happy to be with you today along with Jérôme, with Clotilde and the rest of the team. I stand in front of you today to share our ambitious vision for the future, not just for 2028, but for the years ahead. We are at a turning point, and the choices we make now will pave the way to tomorrow's growth. So, what are our main ambitions for the years to come? First of all, we want to be a leading bank in Europe. We are already one of the biggest players on the continent. We want to make the most of it. We want to leverage our presence in several countries. We want to act as a consolidator of the European banking markets. And I guess you are all aware that we are highly attentive to what happens in the Italian markets. If we were to be approached by Banco BPM for a combination, we would view this very favorably. But in no case we would accept to sell Crédit Agricole Italy for cash. We are a long-standing player in Italy, and we are committed to continue supporting our 6 million Italian customers. Beyond the Italian market, we want to be not just a bank in Europe, but a bank for Europe. Secondly, we want to lead in new technologies, not just using it, but mastering it to enhance security, improve efficiency, personalize services, and create entirely new possibilities for our customers. We will innovate while staying true to ourselves by adding a human edge to the digital excellence. The third and the last, we aim at staying the leader in transitions. We have always guided society through big changes. Environmental, social, demographic shifts bring challenges. They also bring opportunities. We are determined to lead the way. We will not leave anyone behind. Our universal banking model works for everyone, from small households to huge companies. We will democratize solutions for all. As you can see, we are a conquering bank, one that boldly expands its horizon and seizes new opportunities. This is not just about growth for growth's sake, but about creating value for our clients, our shareholders, and our communities. These long-term ambitions drive us to establish 3 major targets on my side for 2028. The first, expanding our client base to reach 60 million customers, allowing our business line to equip them with more solutions. The second generates around 60% of our revenues out of France, with a stronger footprint in Europe and beyond. And the third, achieving operational excellence with a cost-income ratio below 55%, demonstrating both our efficiency and ability to deliver high profitability. These highly ambitious targets reflect our commitment to build an agile, performing, and client-centric Crédit Agricole to ensure a sustainable growth. We have every quality needed to succeed. To start, we have a solid roots and a meaningful raison d'être that puts clients and society first. This is not just talk, it is our DNA. Our mutual and cooperative history, as well as our very stable shareholder base, allow us to conciliate short-term profitability and investment for the long term. In today's volatile world, having such strategic long-term vision is a genuine competitive advantage. It also positions us as a natural investor in innovation and as a consolidator of our industry in Europe. Secondly, we benefit from a decentralized model. It fosters efficiency, thanks to a precise management of both costs and performance at the most granular level. It also allows us to adapt quickly to new contexts. Contrary to many competitors, we make decisions at the grassroots level exactly where our clients and their needs are. This proximity enhances our understanding of local markets and fosters innovation. That's also why our entities made more than 19 billion euros of acquisition during the last 10 years. Identifying business opportunities and making synergies at all levels of our organization is a fundamental strength. Decentralization also creates a sense of ownership and responsibility among our employees, stimulating their engagement and creativity. This is another major strength we have: highly committed employees. We are in the first position among French banks in terms of employee engagement. People are the backbone of everything we do, and we are proud to attract talents from all over the world. Last but not least, the Crédit Agricole Group universal banking model is highly powerful. Thanks to this model, we are solid and diversified, with already 54 million clients and 8 business entities among the leaders in the European market. Our group is highly resilient and relies on solid financial fundamentals, as demonstrated by our leading position on CET1 in Europe. This enables us to absorb shocks and keep going. This model steadily delivers results, the growth of our revenues surpassing European banks over the last 10 years demonstrates our high capacity to generate growth over the years to come. For all these reasons, we are in position to consolidate, to lead, and to shape the future of banking. As you may have understood, I hope, we will realize our ambitious goals for 2028 and set the foundations for the years to come by capitalizing on these strengths. We will also achieve it by implementing a clear and focused strategic plan built on 2 fundamental pillars. First pillar, acceleration. We will expand on playing field, both geographically and into new business domains. We will tap into new markets. We will diversify our service offerings while leading the race of transitions. Second pillar, transformation. We will move faster and better perform. How? By optimizing our IT and processes, by embracing digital innovation, and by becoming more agile across our whole organization. This will make us more efficient, more adaptable, better able to meet changing customer needs and market demands. Together, these complementary pillars will propel us forward. They will help us to reach our ambitious commitments. That said, it's time now for me to give the floor to the team. They will provide you with more details on the implementation of the first pillar, acceleration, and we will start with our retail banking activity in France, where the objective is to gain market share. Please welcome Gérald Grégoire, Deputy General Manager of Crédit Agricole SA in charge of Customer Development and Innovation Division, and Serge Magdelaine, CEO of LCL. Thank you.
Good morning, everyone. First, I would like to remind you that Crédit Agricole has been the largest French retail bank for years, and obviously we have the intention of expanding. To illustrate our leadership, we have in France 32 million French customers, and our group issues 1 out of 3 mortgages in France. As impressive as these numbers are, we know that we haven't reached maturity in our market. We know that we can expand, and we can grow because our value proposition continues to increase and renew. For example, as you know, in terms of renewable energy and accompanying our client as they age. As we increase our contact points, particularly with digital, this gives us more opportunities to better serve our clients and attract new customers. As an example, we have almost 11 million clients who use the Crédit Agricole app daily. And the LCL app is used by 3.3 clients daily. During our strategic plan, we expect to add 8 million new clients. And in order to grow later, we have decided to better articulate the positioning of our 3 banks, Crédit Agricole, LCL, and BforBank. First, the regional banks, which have a close link with the territories where we are present for 1 out of 3 French persons, present for 1 out of 3 small businesses and corporations, and obviously for 8 of 10 farmers. We are a French universal bank, responding to all the needs and serving everyone. And we have a specific ambition, making our universal bank for all to the universal bank for each. We wish also to continue cultivating the distinctive dimension of our value proposition, the broadest and deepest in the market. And we will continue to facilitate and develop digital touchpoints with our clients, while maintaining access to human advice for important operations for our clients. In a few words, our customer promise is by your side all the time for what really matters. For example, for support for all housing projects and retirement planning. So now I will hand it off to Serge, who's going to speak about LCL positioning.
Thank you, Gerard. Good morning, everyone. It's a real pleasure to be here today to share a new chapter of LCL's story that fits with the brand's complementarity Gerard has just presented here. LCL's new story is built around a clear ambition to be the bank for all those who take initiative and who move forward. At LCL, we believe banking today is no longer defined by age, by income, or by background. It is defined by attitude. It is defined by the will to act, to build, to create, to move ahead. Our mission is simple: to be the partner of everyone who undertakes something in life, in work, in business. And to deliver on that mission, we are reinventing the way we serve our clients with a new 3-tier relationship model designed around their expectations and their level of autonomy. First, we are introducing a 100% digital self-care offer for independent, tech-savvy clients who want a smooth, simple, and fully online experience. They value autonomy, speed, and control, and we will give them exactly that. Second, we are strengthening our premium offer directly in line with Crédit Lyonnais DNA, with a dedicated generalist advisor who knows the client personally, follows them over time, and provides truly tailored advice. It's a human, high-touch experience for clients who expect more from their bank. And third, we are creating a hybrid model, bringing together the best of both worlds: a local team available in branch for daily banking needs, and specialized experts on our remote platforms for more complex issues like lending or investment. This is banking that's flexible, efficient, and seamlessly connected. With this triple offer, every client can choose, and I insist, can choose the relationship that fits their life: digital when they want autonomy, human when they need support. This is how we make LCL more agile, more digital, and more relational than ever before. It's how we become the bank for all those who move forward, from students taking their first steps to entrepreneurs shaping the future. At LCL, we are building a bank that moves at the pace of those who act, because when our clients move forward, so do we.
And now, Before Bank, our digital bank. As you know, we recently decided to redynamize Before Bank, and now our acquisition customer is now in line with our prevision, with 200,000 new customers this year. And to further strengthen its complementary with our regional banks and LCL, Before Bank is accelerating the development of its innovative savings and investment offerings, leveraging more than 15 years of expertise. After having presented the complementary positioning of our brands, now it's time to speak about the way in which we will work to significantly attract our four strategic segments. First, the young clients. Second, affluent customers. Third, agriculture segment, professional, small and medium businesses. And fourth, mid-cap companies. First of all, in the youth market, which is essential for renewing our customer base, we will launch a new and disruptive approach that meets the trends and habits of our youngest clients. Our value proposition will be 100% mobile community-based and driven by proactive AI. We want to be the leading bank for young people. At the same time, LCL recently launched a dedicated app for minors to offer them a different experience while offering protection to their parents.
Let's jump to the second column on the slide. The affluent market, ranging from mass affluent people to high net worth, is growing fast in value and in diversity. The recent development of independent advisors network shows the need for new initiative offers. To support affluent customers' projects, Crédit Agricole Group will join forces to develop a globally coordinated expertise, providing access to the best solution for our customer needs. We will make exclusive investment solutions available, including fully digital advisory management and private assets. Our ambition on this segment is to reach plus 1 million gross customer capture.
Regarding the professional and SME market, we also aim to attract an additional 1 million clients. We are confident that this goal will be achieved if we address our clients' entire value chain, going beyond financial services. For example, through our different business lines like Collecto for management services, Call in merchant payment solution, or our new offer, the Human Resources Bank, that coordinates the value proposition of our different business lines, Crédit Agricole Assurance, Work Life, and Amundi, in terms of employees' offerings.
The last strategic market where Crédit Agricole Group aims to strengthen its position is the mid-cap segments. In France, mid-cap companies, so-called ETI, account for 1/3 of corporate revenues and value added. The group has a strong foothold with over 30% penetration and nearly 22% market share in credit outstandings. The position needs to be strengthened in becoming the trusted banking partner of this mid-cap. We have a clear ambition. We want to have one mid-cap out 3 choosing Crédit Agricole Group as their trusted bank in France, leveraging the following drivers. First, joining forces for a coordinated client approach between LCL, CACIB, and Crédit Agricole regional banks. I mean, creation of client teams, alignment of commercial strategies, and establishment of a dedicated coordination and engagement unit within Crédit Agricole SA. Then, deploying our cash management expertise and strengthening our equity financing solutions nationwide through the creation of Indo-Suez Corporate Advisory. Thank you for your attention.
Thank you, Gérald. Thank you, Serge. To present the new growth opportunities that we aim to create in Europe, please welcome Hugues Brasseur, CEO of Crédit Agricole Italy, and Stéphane Priatmi, Deputy General Manager of Crédit Agricole SA in charge of International Banking and Service Division. Thank you.
Good morning, everyone. Let's begin with Italy. We still have a huge space for organic growth on our second domestic market. In the meantime, we can accelerate and improve the amount of synergies through all the products factories in Italy. Our two key targets are focused on two main key figures. The first one is a growth of the portfolio of clients, reaching a portfolio of 6.5 million, which means to be close to 1 Italian out of 9. Today, we are already more than 1 Italian of 10. The second one is to contribute at least for 20% of the global income of Crédit Agricole SA. To meet these targets, we want to strengthen customer capture, focusing on individuals through Crédit Agricole Italia, Agos, and Certo Bank. On individuals with high potential through Crédit Agricole Italia, Amundi, and Crédit Agricole Insurance. Finally, also on professional and corporate with CACIB. We are going to develop a specific digital platform for professionals, since there's still space to become market leader on this specific topic in Italy. To achieve this, we're going to capitalize on our digital platform already inserted in France, Blank. Moreover, we are recently starting an ambitious plan of cross-selling on our portfolio of clients across all business lines to increase synergies. To achieve this, we're going to leverage on a few key drivers. The first one is clearly the better use of data that we are going to share across entities. The second one is based on a better efficiency of the distribution channels and the product offering. Today, Crédit Agricole brand is considered as one of the most recognized in the market. We are leader in the different surveys, ranking number 1 for client satisfaction and among the best for digital app. As a group, we want to reach a strong, attractive and long-term positioning. In the meantime, we remain attentive to external growth opportunities.
Thank you, Hugues. Good morning, everyone. I'm very happy to be here today to discuss about Crédit Agricole's growth in Europe. To begin, let me remind you that Crédit Agricole have a strong presence in Europe, still and yet, generating 40% of its revenue, European revenue outside France, and we manage 15 million clients in Europe. This European footprint has two origins. The first is our leading product factories like CACIB, Amundi, CACEIS, CA PFM, Crédit Agricole Personal Finance and Mobility, CALEF, but also all the producers of the group. We operate, for example, for Crédit Agricole Personal Finance and Mobility in 20 countries with a banking license in every country and a large base of clients. We are also present as a universal bank in 3 major countries in Europe, Italy, but also Ukraine and Poland. So our strategy for Europe is to leverage this strong European presence and to seize all the opportunity of the market, the European market, and the growth of the European market. We want to build this approach on our existing presence and to enhance with a new initiative. First, we want to continue to push all our business in Europe, and we want to create 2 new things. The first is to launch a platform, a digital platform for savings and deposits. This platform will be cover 8 countries, and we will want to start in Germany in Q2 26. Our ambition with this platform is to reach 40 billion euro of saving and deposit. In the same idea, we want to expand our digital offer, Blank, for professional. It's a platform for professional, working very well in Italy from 1 year now, and to make this platform as an offer for all European countries. And after, we will want to expand this platform, professional platform, to agricultural sector for make a best servicing for farmers. Second initiative, we want to create Crédit Agricole Deutschland by aggregating all our existing presence and to enhance with a new project. For reminder, Crédit Agricole in Germany, it's 1 million customer now, and notably through Credit Plus, our loan company in Germany. And we manage 11 billion euro of loans, consumer finance and automotive loans, but also 15 billion euro of saving and deposit. It's so a huge starting point, and we want to enhance this position with the new platform I presented to you. Platform for saving and deposit, platform for professional, platform for all agricultural farmers, and also day-to-day operation, banking, day-to-day operation with our technological platform, Before Bank. We want also to unify the customer base, because it will be very important if we want to make cross-sell and upsell. We plan a launch in Q3 26, and we want to reach 2 million clients in Germany. Following this launch in Germany, we will pursue expansion with additional countries where the Crédit Agricole has an established presence. Our ambition for Crédit Agricole in Europe is very strong, but it's because it's built on solid foundations. First, digital expertise, digital and data. As you know, Crédit Agricole Personal Finance and Mobility and Before Bank know very well all the technology for digital and data management. But we have also all the support. We will have all the support of the group as our product factory in saving, insurance, and in reality in all core businesses. And at last, but it's very important, we have a presence in Europe, a very strong presence, as I shown to you. We have customer, we have clients, we have team, very committed, and we know very well the market and the deep foundation of each market, notably in major countries like Germany. So, as conclusion, let me say to you that all the Crédit Agricole teams will be fully committed to accelerating our European expansion. Thank you. And now I leave the floor back to Hugh.
Thank you, Stéphane. I'm going to talk once again of growth and mid-corp, because we want also to develop new theories of growth on European mid-caps by exporting new know-how. Our goal is to capture at least 200 additional strategic mid-cap clients out of France. We want to support the reindustrialization in high-stakes regions and sectors. Two pillars. The first one consists in leveraging the group's areas of excellence in 4 Europe's strategic sovereignty priorities. It means agri-food, defense, tech, and energy. We already know that at least 1,500 billion euros are going to be invested in the coming years. The second one is to focus on regions with strong trade flow and to support the future reconstruction of Ukraine. In fact, 2 specific triangles, France, Italy, Germany, and the second one, Germany, Poland, Ukraine. And this represents 33,000 mid-caps and 60% of Euro GDP. How are we going to be successful? We are going to implement a pan-European approach by creating an European coordination structure, by defining strategic ambitions on the mid-cap market in each country where the group's universal bank is present, by extending our setup to key countries without a universal bank presence, starting with Germany, and finally, by developing synergy across all business lines operating locally. Thank you for your attention.
Thank you, Hugues. Thank you, Stéphane. The next presentation will deal with how we want to strengthen our presence in Asia, as well as expand our product range and footprint. To develop these points, please welcome Jean-François Balaï, CEO of Crédit Agricole CIB. Thank you.
Ladies and gentlemen, good morning, everyone. Let me begin this section highlighting that Crédit Agricole Group has been present in the APAC region for almost 150 years. Our ambition is to accelerate our regional onshoring. Asia is one of the fastest growing wealth management markets, and we want to address these growing saving pools. First, with Amundi, leveraging on our new partnerships with asset owners and wealth managers, but also expanding the existing joint ventures in India, in China, and also in South Korea. Second, with Indosuez, which benefits from a strong brand recognition in the region by strengthening its capabilities and expanding its investment solution for ultra-high net worth individuals, but also investment professionals. This, especially in Southeast Asia. For CACIB, we also want to leverage our footprint in the region with all of our clients, be it large corporates, financial institutions, or sponsors. We intend to grow on the back of our global leading franchise in real asset sectors, such as infrastructure, project financing, telecom, power, and etc. In all those sectors, we intend to support our clients in the energy transition. Our capital market capabilities are also at the forefront of our growth ambitions, with our ability to raise liquidity for the group and also provide market solutions to all our clients. We are also extending our offering to new geographies. For example, KCI's ambitions in the region are of twofold. First, continuing the development of the Follow the Sun model with the Malaysian platform. Second, opening a commercial branch in Singapore to broaden our services to clients. Then, to summarize, the ambition of the group in the APAC region for 28 are very clear. Amundi targets 150 billion euro in net inflows. CACIB aims at a dynamic expansion with a CAGR growth in excess of 5.5%. And Suez targets 20 billion euro of assets under management. The second strategic priority I will present is the expansion of our playing field. We definitely want to continue expanding our product range and footprint. The private credit segment is growing fast. It increased by 50% in the last 5 years, mainly in the US, reaching $3 trillion globally early 25. And it is expected to reach circa $5 trillion by 29. We are naturally sizing the potential of opportunities in this market. There is a strong client demand for private assets. Here is how we want to benefit from this situation. First, Crédit Agricole Assurance is accelerating its investment in private assets to enhance the yields offered to their policyholders. Second, Amundi and Suez Wealth Management are positioning themselves as leading players in developing investment solutions for private and institutional clients, contributing to the democratization of private assets. In that respect, Amundi just announced this morning a strategic partnership with ICG, a European leader in private assets. The partnership includes a 10-year distribution agreement giving Amundi's clients privileged access to ICG's expertise and wide range of strategies. Amundi and ICG will develop joint offerings designed to provide wealth clients with access to private assets. Finally, CACIB, thanks to its leading franchise in real estate, is already originating real assets, matching investor appetite, and also providing enhanced support to debt funds. We are also accelerating our development in payments, collection, and cash management solutions. That means, first, integrating technological shifts in our commercial offers to meet market demands. Second, developing non-financial payment services. I will give 2 examples. One, with Call, which is a strategic alliance between Crédit Agricole and Worldline. 2, with Collecto on electronic invoicing. Third, continuing upgrading our platform on cash management to deliver best-in-class products and services in France and in Europe, leveraging on blockchain technology when relevant. Then, to summarize, our ambition for 28 in these areas are, first, doubling card payment volumes versus market growth. Second, increasing by 20% transfers and direct debit volumes. Thank you for your attention.
Thank you, Jean-François. Thank you very much. We now come to the final lever of the first pillar, acceleration, which is about transitions, all types of transitions. And to present it, please welcome Eric Campos, Chief Sustainability and Impact Officer, and Nicolas Denis, CEO of Crédit Agricole Insurance. Please welcome.
Ladies and gentlemen, in 2019, Crédit Agricole made a major strategic choice to become a key market maker for supporting the world transitions. Today, I will present how Act 28 amplifies this ambition by shifting from a sustainable economy to a regenerative economy with ambitious quantified targets. Our 2022-2025 plan is structured our action around 3 fundamental pillars: transition towards a low-carbon economy, social cohesion and inclusion, and agricultural and agri-food transitions. This strategy has demonstrated that the financial institution can be a true driver of societal transformation, and these results speak for themselves and position us ideally to accelerate further. First, we strongly reaffirm our commitment to keep on continuing our commercial activities in line with the 2050 net zero trajectories issued and publicly disclosed in 2023 and 2024. In 2025, we're taking a decisive step forward. We are willing to move towards an economy that regenerates rather than simply reducing negative impact. Our quantified commitments reflect this ambition around three strategic pillars: leadership in the ecological transition economy, with a green to brown ratio of 90 to 10. For every euro financing fossil fuels, we'll finance 9 in the ecological transition by 2028. 240 billion in outstanding commitments dedicated to financing transition by end 28. And 2 strong initiatives for green businesses: launch of the Climate and Nature Forces, which is a network of internal expertise to develop innovative method and computation for climate and biodiversity. Launch of Agricole Natural Capital Initiatives, which is a pioneering program to design nature-based solutions and ecosystem restoration. Second, intensification of the inclusive economy. 600,000 homes retrofitted for energy efficiency by 2028, ensuring a just transition in all territories and developing financial products accessible to all. Third, support for territorial growth sector, supporting local innovation, strengthen local reindustrialization, and support the agri-transition, with an objective of 1 billion in revenues from sustainable finance. These figures illustrate our commitment to the real economy, an economy that creates sustainable employment. For example, each retrofitted home generates direct activity in close geographies, an economy that delivers tangible transformation, 240 billion financing the transition on the ground, an economy that generates shared value, 1 billion in revenues proves that transition goes hand in hand with performance. We believe we are not a just traditional financial player. We are a low carbon energy strategist with a green to brown ratio of 90 to 10 in 2028, a trusted partner for local and economic ecosystem, and a catalyst that places people at the heart of every decision. Our conviction is clear. Finance can and must be a tool for economic, social, and environmental development. With Act 28 plan, Crédit Agricole confirms its pioneering role in Europe. Our quantified targets demonstrate that regenerative finance is not only necessary, but also creates sustainable value for all our stakeholders. Thank you for your attention.
Thank you, Eric. Good morning, everybody. As Eric Campos explained to you, we aim to prepare the world for the next generation. Indeed, the world is changing. We are entering the demographic winter. Demographic aging is one of the greatest challenges of our times, reshaping economies, societies, and the way we live. As a leader in savings and retirement across Europe and France, Crédit Agricole carries a major responsibility to protect, empower, and support both its clients and society in navigating this deep transformation. Let me share you a few figures to illustrate this issue. First, globally, the number of people of 60 will double by 2050
compared to 2020, and those over 80 will triple. Second, in France, 1/3 of the population will be over 60 by 2030. Demographic aging accelerates wealth transfers, strengthens public systems, and creates new demands for quality of life. In face of this demographic challenge, Crédit Agricole is committed to being a source of support and security for its clients, guided by 3 key pillars. Securing asset transmission first, second, reinventing retirement, and third, fostering healthy aging. So, first pillar, wealth transfer. In France, over 3 trillion euro is expected to change hands in the next decade. To ensure these transfers happen securely, we are focusing on the following levers: strengthening family relationships within our bank networks, digitalizing all the client journey, developing tailored transmission solutions, and, of course, engaging all our private banking advisors. Our aim is clearly to become the trusted partner for this intergenerational wealth transfer. So now let's speak about our second pillar, retirement savings. As you know, the demographic transition is putting strong pressure on pension systems, especially in France. Thus, a recent study conducted by Crédit Agricole Assurance in partnership with IFOP highlights growing public concern, with 73% of respondents in France expressing deep concern and skepticism about the current system. In this context, our approach combines different principles by geography. Across Europe, first, we will deliver investment solutions for all public and private pension schemes. This is key for Amundi's strategy, and that's why Amundi has created a specific dedicated business line. In Italy, we'll accelerate growth with new offers tailored for individuals and corporate with Crédit Agricole Italy, Crédit Agricole Vita, and Amundi. In France, we will strengthen our leadership in individual retirement saving with the PER, Plan d'épargne retraite. It will come with seamless digital approach, offering clients to engage either digital journeys through mobile first or be supported by their banking advisor. We will also accelerate our collective retirement offers. We developed a specific approach called La Banque des DRH, the Human Resource Bank, jointly with Crédit Agricole Assurance and Amundi, with specialized banking advisor in our banks. We want to become a leader both in individual and group retirement planning in Europe. This ambition comes with 2 clear goals: become the undisputed leader in group and individual retirement outstandings in France, and specific for Amundi, achieve more than 75 billion in net inflows across Europe. We are living longer, and the issue is also to be aging well, which is our third pillar. We are committed to supporting seniors and caregivers at every stage of the life by designing health insurance solutions tailored to seniors and retirees, ensuring a smooth transition to individual coverage at retirement, and expanding the Crédit Agricole Santé Territoire, built on 2 strong axes: access to healthcare and healthy aging in all our territories in France, and create innovative living solutions such as senior co-living with cette famille and dedicated caregiver support through Petit Fils. As you understand, our success relies on the perfect balance of proximity, expertise, and innovation, powered by the strengths of our group and a strong synergy between the banks of the group, Crédit Agricole Assurance and Amundi. It's a question of trust, of caring, and of protecting. Thank you for your attention.
Thank you, Eric. Thank you, Nicolas. It's time now to move on our second pillar of the project, of the plan, transformation. For this, please welcome Grégory Herfelin, Deputy General Manager of Crédit Agricole SA in charge of transformation, human resources and transition division, and Olivier Bitton, Director of Technological Transformation of Crédit Agricole SA. Please. Welcome. Gentlemen.
Good morning, everyone. We are now going to talk about transformation. Transformation of our industrial, technological, and HR approaches in order to reach the ambitions and the targets for 2028, but also to prepare for the future. I would like to emphasize three critical challenges that will define our transformation strategy. First, speed. Speed and speed. In today's fast-evolving financial landscape, speed is not just an advantage, it's a necessity. We are committed to significantly accelerating our time to market, ensuring that our innovations and solutions reach our clients faster than ever before. Second, efficiency. Efficiency is at the heart of our transformation. We are implementing robust value-driven management practices, focusing on optimizing our processes and resources. By leveraging data, technology, and streamlined governance, we aim to maximize value creation and operational performance. Speed, efficiency, and finally, strategic autonomy anchored in Europe. Our strong European roots are a unique asset. They empower us to pursue strategic autonomy, ensuring that our decisions and innovations are aligned with the interests of our clients and communities across Europe. This autonomy is essential for safeguarding our independence, fostering resilience, and supporting the long-term ambitions of the group in a rapidly changing geopolitical and regulatory context.
Good morning. So now to support speed and efficiency, we will launch group-wide industrial capabilities powered by advanced technology. As you might know, Crédit Agricole stands as a major technology player. We dedicate more than 5 billion euros per year to technology. Our strength lies in our ability to empower each business line with significant autonomy, including, of course, IT resources. Yet, as data and AI become strategic imperatives, we've decided to equip the group with new cross-IT capabilities that will serve all our businesses. We are launching two key initiatives. The first one will be a group-wide data marketplace. This platform will accelerate data sharing between all entities, breaking down silos and enabling every part of the group to leverage the full value of our collective data assets. The second one will be an AI factory. This initiative will provide AI assets and tools to all entities, allowing them to focus mainly on adopting AI in business processes. However, our ambition goes way beyond transforming processes with AI. We are committed to bringing every member of our staff along in this journey. We will provide training for all our colleagues and equip them with AI assistants tailored to their roles, ensuring everyone benefits from these new capabilities. This will reduce administrative tasks by 20%, allowing our teams to focus on delivering greater value to our customers.
But beyond serving the needs of our entities, these new technical capabilities that Olivier has just presented are also the bedrock for new high-impact growth initiatives. We have decided to create a dedicated business line focused on digital trust that covers solutions that guarantee stakeholders' reliability, propose secure digital identity solutions, and digitalize business processes in a trustworthy manner, like electronic signatures, for example. This new business line will serve the group's entities in an industrialized way and, where relevant, extends its services to the broader market. Digital trust is a critical issue in Europe, and Crédit Agricole, as a trusted third party, has a unique role to play in setting the standard for security, privacy, and reliability in digital interactions. The second initiative concerns a group KYC platform. In response to rapidly evolving regulatory requirements and the growing importance of digital identity, we are developing a group-wide KYC platform. This platform will guarantee that we can deliver on our promise of digital trust to clients, while also driving operational efficiency in compliance processes. These new cross-functional capabilities are just enablers for our entities. They are strategic assets that position Crédit Agricole at the forefront of digital trust and regulatory excellence, supporting both our clients and our operational ambitions.
So now on this slide, you can see that the subtitle states that we want to be more agile, more efficient and responsive. That's quite a program. In fact, cost efficiency is a key driver of speed. By ensuring that every euro we invest delivers maximum value, we empower our project teams to make better decisions, simplify both our products and our technological ecosystem. We will also continue to consolidate our infrastructures to make sure that our technological backbone remains robust, scalable, and cost-efficient. But to truly accelerate our time to market, we must also focus on the earlier stages of the project cycle, when new solutions are being designed. We have already implemented a large-scale agile transformation within our IT teams. What we will do now is extend these agile practices to the business teams that are the most impacted by these transformations. Our ambition here is clear. We want to cut our time to market in half.
And to act faster, to improve performance and accelerate our time to market, we also need to instill a lasting culture of simplification. In today's environment, all banking groups face intense regulatory pressure and a growing complexity in their operating landscape. Without a continuous effort to simplify, the necessary mastery of risk can result in added complexity that weighs heavily on our teams and ultimately reduces our performance. That's why the group general management here is fully committed to simplification, embodied in our +1, -1 principle. Every new process or requirement must be balanced by a corresponding simplification elsewhere. To give you some examples, that means you create a new committee, you cancel another committee. You want a new report, you delete another one. You create a new offer, you cancel an old one that no longer fits customer needs, and so on. It's simple, but very demanding. This discipline ensures that we do not allow complexity to accumulate and that our teams remain agile and focused on value creation. We are also questioning the way our support functions operate, with a dual aim of improving performance across the entities and, above all, enabling the 20,000 staff in these roles to be even more effective in supporting those who are directly serving our clients. By making simplification a core management principle, we are safeguarding the benefits of our transformation efforts and empowering all our teams to deliver their best for the group and its clients. We have talked so far about the industrial and efficient approach of transformation. I will now say a few words of our organization to support innovation. As you know, at Crédit Agricole, innovation is embedded in every business line in a decentralized approach. However, certain topics require a different or more coordinated approach. That's why we will continue to capitalize on two main types of structures. First, we will further develop our startup studio, La Fabrique, which has already given rise to breakthrough startups and disruptive offerings that reinforce the group's development. And second, will amplify the development of services offered to third parties outside the group, particularly in technology. Amundi Technology is the most emblematic example of this strategy, providing innovative solutions to institutional clients and strengthening our position as a technology provider in the financial sector. When it comes to tokenized finance, we have decided to strengthen the strategic coordination of this topic, which involves many subsidiaries of Crédit Agricole SA. We will capitalize on the MiCA approval obtained by CACEIS, as well as the expertise of CACIB and Amundi, to accelerate our development in this field. This coordinated approach will enable us to offer a comprehensive range of tokenized financial solutions, meeting the evolving needs of our clients while respecting our duty to advise.
Okay, so let me turn now to another critical dimension of our transformation: how we will strengthen risk management while driving greater efficiency. On the left of the slide, we mean that by harnessing advanced data analytics and artificial intelligence, we are enhancing our risk controls, and at the same time, we want to reduce the operational burden on our teams. This enables us to achieve a higher level of risk mastery with greater efficiency. When it comes to IT risk in the middle of the slide, our commitment to investments remains unwavering. Resilience must be continuously reinforced in an environment where the risks are constantly evolving and accelerating. For example, cyber threats are increasingly leveraging new technologies like GenAI to attack, and of course, we are equally determined to use these innovations to defend. Another key priority mentioned here is ensuring that our standards and controls are constantly applied to our key suppliers. This is major to guarantee that our end-to-end security. On the right of the slide, as Gregory highlighted in his introduction, reinforcing our policy in strategic autonomy will further strengthen our resilience in this uncertain environment. But at the same time, we want to emphasize that it presents a tremendous opportunity for Crédit Agricole to contribute to the development of the European technology ecosystem, both through our technological choices as a customer and through our investment capacities.
To conclude this part, related to our second pillar, transformation, it's essential to reaffirm that people are at the core of our model and our transformations. At a time when everything is accelerating and some predict the dehumanization of society, we are making the opposite choice. Our global talent pool is exceptional, and we are convinced that our future success depends on our ability to support and empower our people. Trust will be at the heart of this ambition. We will carry on our empowerment approach leading to simplification initiatives and sustainable development. Also, we have decided to focus on developing our staff skills while mapping target skills and corresponding training strategies. For example, to lead on our digital transformation and also to support our international business growth ambition. As you know, Crédit Agricole culture is our strength. Our collective and team spirit, our strong universal values, and the way we all focus on servicing our clients while embarking societal priorities is at the heart of our project. We shall nurture our collective spirit and enhance sharing on a global basis. We have identified the opportunity to share a flagship location, a specific place where our staff will meet, share, collaborate with trust and enthusiasm, demonstrating our cohesion across different expertise and geographies. By putting people first, we are ensuring that our acceleration and transformation are both sustainable and meaningful, creating value for our clients, our employees, and the group as a whole. Thank you all for your intentions.
Thank you, Gregory. Thank you, Olivier. Now it's time to assess the figures, to translate these ambitions and these action. And welcome Clotilde Langevin, the CFO, the Deputy General Manager in charge of Finance and Steering. Come on. Up to you.
Hello, everybody. I'm very happy to be here with you. So to reach the strong development ambitions that have been outlined here, we're going to build upon the strengths of the group. And besides our diversified and our universal development model, we can also rely on a strong capital and liquidity position for the group Crédit Agricole. With our CET1 ratio at the level of the group at 17.6%, we are the most capitalized of European JSIBs, and we have a margin of 770 basis points above the SREP requirement. We are going to commit to stay above 17% throughout the plan, and this is made possible by the group's ability to retain 75% of its earning. And we're also confident on our ability to maintain our CET1 ratio above 17% beyond 2028, thanks to our capacity to generate capital, including the CRR3 regulatory impact. I'm thinking about the output floor. TLAC ratio will be around 27%, excluding eligible senior debt. And this strong group capital position is going to allow CASA to operate with a lower level of capital, as always, particularly thanks to the solidarity mechanism between the Crédit Agricole network members and also to our demonstrated capital circulation capacity. The liquidity position of the group is also very solid. We have stable, granular, and diversified customer deposits. We have high liquidity reserves, and we have LCR and NSFR ratios that are very comfortably above the requirements. We're going to continue to manage them well in excess of these requirements within a range of 110 to 130% for LCR, which is an optimized manner. Why? Because we can rely on about 130 billion additional non-HQLA reserves that can feed quickly into our LCR ratio, and a range of 110 to 120% for NSFR. So we've built this strong position thanks to our demonstrated capacity to generate strong revenue growth. The CAGR for Crédit Agricole SA revenue over the past 6 years was 5.7%. And it was driven mainly 70% by organic growth, thanks to customer acquisition and equipment, but also by external growth operations, which amounted over 6 years to a total of about 10 billion euros, and where we delivered an ROI above 10% within 3 years. And these operations contributed to operational efficiency and to revenue growth. Now, this revenue growth has fed into the growth of net income over the past 6 years, with a CAGR of 7.3% to reach the starting point of our plan, which is 6.9 billion in 2024 pro forma. And the profitability targets we display here continue to strongly increase. We have an ambitious net income group share target of at least 8.5 billion at the end of our plan. This represents a cumulative growth of close to 25% compared to the 2024 baseline position. As it has been the case for many years, this growth in net income will come from a virtuous combination of dynamic revenue growth, strict monitoring of expenses, and prudent risk management. Now, revenues are going to grow by more than 3.5% per year over the plan in an uncertain environment and under the hypothesis of moderate economic growth in Europe. As always, when we define our medium-term targets, I'm talking here about organic growth. Costs. We have a cost-to-income ratio ceiling for 2028 of 55%, and we will reach this by monitoring the jaws, which should be positive over the plan in each division. And of course, we remain cautious on cost of risk, and we maintain the previous assumption at 40 basis points for CASA, which is in fact prudent in the light of the loan loss reserves that we have accumulated in recent years, which represent an absorption capacity of 1.6 years of cost of risk for CASA. And of course, since the equity accounted entities now include Victory Capital, part of CAPFM mobility activities, and starting in the fourth quarter of this year, our 20% share in Banco BPM, we guide for a 1.5 times increase in their contribution by 2028. Now, all of the business lines are going to contribute to the growth of revenues, which will reach more than 30 billion euros by the end of the plan. And so I'm going to provide you with the key growth drivers in each business line. So in asset gathering, all of the businesses in this division will contribute to roll out a comprehensive range of savings and retirement solutions for our customers, and will support the coming intergeneral transmission of wealth in Europe that Nicolas was talking about. Amundi is going to accelerate in ETFs, in Asia through JVs and direct distribution, in individual retirement and with third-party distributors. Amundi will also benefit from the continued development of technology revenues. And of course, as Jean-François was saying, Amundi will develop in private assets with the ICG partnership that was just announced. Crédit Agricole Assurance plans to strengthen multi-equipment in France and to grow outside of France in P&C and personal insurance, and through European partnerships, in particular on mobility and with Banco BPM. And the savings and retirement outstandings, of course, will grow strongly. Indosuez will strengthen its offering, in particular in corporate advisory, following the integration of Degroof Petercam, and will accelerate in Northern Europe and in Asia. And it's also going to continue to develop with ultra-high net worth individuals. Moving to the large customers division, CACIB will reinforce its leading positions in real asset financing and projects, in energy transition and also in strategic autonomy, and will further develop cash management and equity derivative solutions. It's going to reinforce its relationship with existing customers and strengthen its presence in Europe outside of France, and finally accelerate in the United States and in Asia. And CACEIS will support customers in their transitions to ETFs, to real assets and to digital assets, and will accelerate with pension funds in Europe. And CACEIS will also strengthen its position in Asia, leveraging on the integration of ISB with the Follow the Sun setup. In specialized financial services, CAPFM will continue to restore its margins in personal finance and will develop new offerings linked to home renovation, health and services. And in mobility, it will further develop Crédit Agricole Auto Bank with diversified partnerships, will accelerate the development of leases and ramp up on GAC leasing, but will also develop services and insurance. And Crédit Agricole Leasing and Factoring will accelerate on factoring in Europe and will expand on energy and circular economy solutions. And finally, in retail banking, LCL and Crédit Agricole Italia will have slightly different growth stories. LCL is going to benefit from the increase in its net interest income, while Crédit Agricole Italia revenues should increase more moderately over the period, with an expected drop in NII in 2026, but followed by a recovery in 2027 and 28. Crédit Agricole Italia is going to capture new customers, 650,000, and will accelerate in the high added value specialized segments that Hugues was talking about, such as corporates and private banking segments, all the while adapting its network to develop fees and to equip customers. And LCL, as Serge was saying, will transform its relationship model to capture customers, 1.5 million, including 360,000 entrepreneurs, and will develop solutions for customer segments requiring strong expertise. So revenues, as you can see, are going to remain balanced among business lines and customers. However, as a consequence of our intention to develop internationally, the share of Europe, excluding France, in our revenues will increase from 42 to 45%. The share of Asia will increase by 1 percentage point. And so all in all, our revenues generated outside of France will be close to 60% in 2028. So I talked about revenues. Moving to operational efficiency, our cost management policy remains unchanged. It's based upon the strength of our decentralized model. Each business line aims to remain best in class in its market with a strict monitoring of its cost-to-income ratio. So some examples of business initiatives, an optimization plan in Amundi, productivity gains in the CIB, thanks to the acceleration of AI, thanks to the rationalization of IT, or the optimization of the organization. Operational gains for CACEIS, for example, thanks to the differentiating follow-the-sun model and to the enhanced use of AI and data. And both LCL and Crédit Agricole Italia will roll out an ambitious transformation plan that will lead to IT and operational efficiency. So if we combine these levers, the synergies from the ongoing integrations of De Groef and ISB, and the joint initiatives, Gregory was talking about the QAC platform, we should have reduced our cost base by 5% at the end of the plan, which leaves room for additional investments to support our development. And our target in 2028 is for the cost-to-income ratio to be below 55%. So we're going to support our growth ambitions by investing, but also by allocating capital to our growing businesses. The allocation of RWA over the plan is going to remain balanced between the businesses, with an increase in particular in the most accretive businesses of asset gathering and large customers. So this is going to fuel the business line's profitable growth. And so based upon a normalized level of equity at 11% of RWA, all of our businesses will have double-digit RONEs in 2028. So we're going to focus on profitability. And this focus also goes for M&A operations, because all of the figures that I've presented previously are based upon organic growth. Of course, we can also seize external growth opportunities, as Olivier was referring to in the beginning, if they comply with strict financial criteria, i.e., a return on investment of at least 10% within 3 years, accretive operations in terms of ROTE, and of course, demonstrated integration capacity and synergy potential and compliance with our risk and compliance criteria. All of this will create value for our stakeholders and our shareholders, which Jérôme, who I do not need to introduce, will now describe.
Thank you, Clotilde, and good morning, all. It's a pleasure for me to be, for the fourth time in a row, here to present a medium-term plan, and I will give you breaking news. It's probably going to be the last time. I'm going to walk you a little bit through this last slide, which is presenting the building blocks of the value creation and presenting all the reasons why we claim that we have a lot of optionality embedded in this medium-term plan, considering the results that we are going to accumulate. So let me start with the starting point, which is indeed the level of CET1 that we have end of 2024, 11.7%. It's been increased beginning of this year. It's for once a positive contribution from the regulation by 50 bips. And then lastly, based on what all the team has presented and based on the figures that Clotilde has described a little bit more in detail, we are going to create an additional 720 bips of capital over the course of the medium-term plan. So that's the starting point. Then second point, distribution, of course, and shareholder value that we intend to create. We are going to stick to our policy, which is in place in the last at least 10 years, which is to distribute in cash 50% of our earnings. And I remind you that even when banks were precluded from paying dividends, we've managed to remain shareholder-friendly and to pay the dividends. So indeed, this 50% over a long period of time is quite attractive, actually. So this will represent around 390 bips of capital distributed, which is roughly 1/3 of the market cap of Crédit Agricole SA as of today. It includes, of course, the 81 coupons that we'll have to pay also during this period of time. The innovation that we are going to introduce regarding the dividend is the fact that starting in 2026, we are going to pay an interim dividend. It's becoming seemingly a market practice, and so we are going to apply this market practice. Third point, regulatory impacts are slowing down. So I told you that CRR was creating 50 bips of capital beginning of 25. It was after a lot of capital consumption in the previous years, and it's before another 40 bips estimation that we've made of capital consumption for the coming years, including 10 bips for the famous FRTB that is regularly postponed, so we never know. Then, of course, we want to fuel our growth. And we will fuel the organic growth of our business lines. This is going to represent more or less 250 bips of capital over the coming years. Part of these 250 bips, are linked to M&A transactions that have already been concluded and are integrated in our trajectory in 2025, the biggest one being the acquisition of the remaining 30% of the capital of CACEIS that we bought from Santander back 6 months ago. But you have also bits and pieces that you know, which are included in the 250 bips for a total of 70 bips. And so the remaining part of those 250 bips after the 70 bips is representing more or less the 70 billion RWA that were presented previously, with an associated profitability that is going to be permanently, and for all business line, double-digit return on normalized equity. We will, of course, continue to focus on optimizing our RWAs using all the possibilities that the market is offering, including, of course, the SRTs. It's a tool that we are already using, but probably much less than some of our competitors. And we have embedded in this plan the assumption that we are going to increase our efforts of using SRTs, especially for CACIB and for CAPFM. But we are also going to monitor the evolution of our trajectory, and we are ready to do more than what is embedded in the plan, if needed, if we have a decent price of release, of course, which is going to be a key metric that we are going to follow, and if we have a good use of the capital that we can free by increasing the level of SRTs. So this is definitely an area on which we have flexibility and the capacity to do more than what is in the plan nowadays. Fifth point, of course, and this has been said by Clotilde, I reiterate it, we confirm that our target in terms of CET1 ratio for CASA is and will remain 11%, and it's perfectly coherent with the fact that we are part of a bigger group, which is a systemic institution. It's not the case for Crédit Agricole SA standalone. And this bigger group has a very high solvency, above 17%. It's our commitment to keep it above this level. So this is giving up a significant level of strategic flexibility. If you add up all the numbers, you will end up with the fact that we have probably around 150 bips of capital available. This would represent around 6 to 7 billion euros that we may use over the course of the plan for value-creating external growth operations. We've talked a little bit before about the track record that we have regarding these operations, and of course, the commitment that we take also today is that we are going to stick to the same criteria in order to continue to create value. I want to insist on a very important point. These possible operations that we have not identified as of now, of course, are not included in our trajectory, not in the revenue growth, not in the level of profitability. So this is leading to a situation where we have this flexibility, and if we use it, we are going to generate additional revenues and additional profitability. And of course, I hear the question that you have in mind: what if we don't use it? the answer is quite clear, actually. If we don't use it, we have no vocation to accumulate capital at CASA. The entities of the group in which capital is piling up are the regional banks, and this is part of our global equity story. But at CASA, we do not intend to accumulate capital. I have no doubt that we will find relevant opportunity of growth in the course of the next 3 years, but if not, we have no ambition to accumulate capital at CASA. Lastly, I will conclude with this figure that I reiterate. We have a very prudent target in terms of return on tangible equity, 14%. And again, this target does not include the potential benefits of M&A transactions, does not include this benefit in terms of possible additional results, and also does not include the fact that if we do these transactions, we are going to operate with a level of capital that would be closer to 11%. So here are the main elements I wanted to present to you today, and we would be ready with the team for your questions after the conclusion of Olivier, I guess.
Thank you, Clotilde. Thank you, Jérôme. It was very clear. The presentation is now coming to its end. To conclude, I would like to remind you 3 main 28 objectives I initially set. 1, expanding our client base to reach 60 million customers. The second, generating around 60% of our revenues out of France. And the third, achieving operational excellence with a cost-income ratio below 55%. To reach these targets and deliver a robust financial performance with a net income above 8.5 billion euros and a return on tangible equity, prudent, as said Jérôme, above 14%, we have built an ambitious strategic plan. Let's be clear, none of this will be accomplished by Crédit Agricole SA alone. We will succeed as a group in cohesion with regional banks, especially for our transformation. Please see us as one team. Our strength is collective. Crédit Agricole SA entities act as the business partners for the regional banks. We help them to offer the best products to clients, while Crédit Agricole SA benefits from their strong distribution network and their highly stable capital and financial fundamentals. Cohesion and collective action will enable us to reach the targets of our new plan. We have now reached the end of our presentation. Let's begin the Q&A session, and we'll start with questions from the auditorium. Oh, any hands?
Hi, good morning. Thank you for taking questions. Delphine from JP Morgan. Could I maybe start with your ambitions in Europe, and more generally speaking? I mean, and your M&A interest. In the past, you know, if you look at all the partnerships and the acquisition you've done, is to strengthen your product factories. You've been opportunistic in Italy as well. Just wondering now, with the increased focus on Europe, is your M&A interest going to be a lot more on opportunities in Germany or Banco BPM? Just if you could elaborate a little bit on that. And my second question is on your revenue growth of more than 3.5%. A large part, I mean, actually, the highest growth seems to be in large customers, but also SFS. So just wondering, like, you know, is that fuel mostly because of more capital allocation, the volume growth, margin expansion? If you just can maybe elaborate slightly more on that, because that's where the difference is, I would say, versus, you know, market expectations. Thank you.
Thank you. Maybe for your first question, the strategic plan is focused on organic growth. And if we have opportunities to do an external growth, obviously we have the capacity, as mentioned, Jérôme, to have M&A operation and so on. It's not a question, but we want to focus our plan on organic growth. It's clear for us. And if we have opportunities in Italy, obviously, in Germany, obviously, in Poland also, we want to increase our footprint in Europe. It's clear because we want to become a leader in Europe. But this strategic plan is focused on organic growth. For the second question, I can give the floor to Clotilde or Jérôme. I don't know.
Thank you, Delphine. Maybe in the first few elements. Indeed, we have strong growth in the large customers division, which is in particular due to CACIB, who has strong growth dynamics planned in this medium-term plan, above 4%, whereas CACEIS is more on a plateau regarding net interest income. Now, if we look at SFS, Specialized Financial Services, we have a little bit of everything that you were talking about. So we have a volume growth, we have a recovery in margins because we have our revenue on the outstandings that is increasing. We also have a strong increase, 1 billion of revenues in insurance and services, which is also fees and commissions income is going to increase also. And of course, we also have the development in Crédit Agricole leasing and factoring, in particular for renewable energy and on factoring. So all of these are going to drive into the growth. The allocation of RWA to the business remains very close to that we had previously. However, the equity accounted entities are going to increase in this business.
Yes, let's go. Go ahead.
Thank you. I'm Karin from RBC. On capital, please, and your ROE target, just to confirm. So basically the 14% ROTE at the lower end would correspond with you not having invested the 5 to 6 billion. So you're more running with a 12% core tier 1. As that runs down, the ROE pushes up.
Exactly. I don't know if the mic, it works. Yeah. So exactly, we've simply computed the figures at the end of the plan in a situation where no M&A transaction would have been conducted, and so we take the capital as it is, the net profit as it is, and we end up with this 14%. So it means, as I said, if we have additional results and if we have less capital because we've done positive value creative operations, we would improve the return.
Okay, thank you. And then on the RWA growth, it seems the 17 billion seems quite high relative to your revenue growth. Does it already post SRTs or is that pre-SRTs? And maybe on the 40 basis points of regulation, is methodology changes? What are you seeing, or is this a safety buffer? Thank you.
So the 70 billion euros does include SRTs, as Jérôme was saying. An increase in SRTs, we are, as you know, very low compared to the average of other European players in terms of the share of our loans that are securitized. It's 3.5%. So we're going to increase SRTs, in particular for CIB and for CAPFM. But we also have leeway and optionality to go further, adjusting, as Jérôme was saying, adjusting to the decisions we can take, in particular in terms of M&A. Now, the 70 billion growth that you're talking about, you're saying that it seems important compared to the revenue growth. But as I was saying, when we have our target of net income, this target is driven by revenue growth, operational efficiency, etc., but also the times 1.5 in equity accounted entities. So in fact, the indicator revenue divided by RWAs is not a very relevant indicator in the medium term where we have an increase in equity accounted entities.
Okay, let's go.
Thank you for taking my questions. Sharat from Deutsche Bank. I have two questions. Firstly, on your retail strategy, digital strategy at B4 Bank. So do you think there is merit in pursuing this aggressively given the already competing pace or the penetration at peers? What makes you confident of being successful in the youth segment? The second question is on the strategic partnership that Amundi and Intermediate Capital Group have announced. Can you elaborate on the partnership and why did you see the need to take a minority stake? Is there ambition to go beyond 9.9% stake? Thank you.
Okay, thank you for your question. I give the floor to Stéphane for Before Bank and for the young people to Gérald and for Amundi.
So thank you for your question. So Before Bank now, what is the situation of Before Bank? We have 400,000 clients in Before Bank, and each month it's 15,000 more. So it's starting of a good result. Now we want to accelerate in 2 or 3 different ways. First way, we want to make saving on loans more attractive for the clients of Before Bank, because saving and deposit is what the customers want now. So it's very interesting, and the profitability of this part of offer is good. So Before Bank will be a digital bank with all banking offers, but we want to acquire customer with saving and loan. Second element of acceleration, we want to reduce the cost to serve, so we will make a lot of effort to have the same cost to serve as our competitors. And the third, in the international way, we started 3 months ago to launch Before Bank in Germany, so we have to see the result of this. And we want to take all the digital and technological asset of Before Bank to build our bank in Europe, notably at first Crédit Agricole Deutschland for the everyday banking, for the management of account of the customer, who will be on the asset of Before Bank. So we are always very optimistic on Before Bank, and we want to get the balance, the break-even in 28, 29. So we will follow this. Thank you.
Okay, thank you. It's clear we want really to reach the break-even in 2029, 2028 maybe, in dividing by 2 the cost income and the cost to serve. And it's very, very important, and we are focused on that to improve the profitability of Before Bank. Gérald, for the young people, for the youth, innovation.
First, I would like to remind that we are a leader in France on the youth market, on the youth segment. So to further strengthen our position, we also know that we have to adapt our organization to the habits and trend of this kind of client. First of all, we are accelerating our digitalization. That's clear. That's the way to succeed in this segment. We also are working with all the business line to review our offers, because we know that we have also to work on the access offer with all the business line to propose a competitive offers to younger clients. And finally, we also knew that we have to adapt our kind of communication to this kind of clients. That's why for 1 year, I don't know if you know, but Crédit Agricole is certainly the most present bank in the social networks in France. And we want to intensify our presence in the social networks. And you also use now new way of communication. So for this reason, we are confident to aim our objective to remain the French leader in the youth segment.
Thank you. And Nicolas Calcoun, Deputy CEO of Amundi, for your third question.
Thank you for your questions. So this very important partnership with ICG is designed to help us to have access to very high quality products and expertise in private asset to complement our own internal offers. I'm thinking in particular of private debt or secondaries, but there are many good quality expertise that they have, so that we can very rapidly benefit from the democratization of private assets that was mentioned by Jean-François earlier. So the stake we are taking is here to cement this partnership and to ensure a good alignment of interest. And we don't have any intention to go beyond the 9% stake that we announced.
Thank you, Nicolas. Many questions?
Yes, hi. Good morning.
Well,
yes,
okay.
Tarek Emejad from Bank of America. Just two questions from my side. First, on the universal banking model kind of aspect from the plan. Reminds me from many year plans ago where universal banking was the new thing. So is this because of all this SIU and capital market union that you feel this is the time to position across Europe and to capture that and position a bit early? But I was surprised there's no mention of SIU in the whole plan. I know it's 2028 plan and this is probably coming after. But just want to understand your turn here into more Europe. And the approach you took in Germany is more retail, kind of very competitive part, I would say, of the German business. So what's your edge there? And then the second question is on Italy. So I think you managed very well given the situation. You've done what you can do from your side. It's not all in your hands. But I mean, I guess without going to scenarios, but let's say there's another M&A that's happened that doesn't involve you. How do you think you can protect your interest in terms of Agos, the non-life insurance, and the different distributions you have in place? Thank you.
Okay, thank you for your question. First of all, for Germany and obviously for the Universal Bank, we are the champion of the model of a Universal Bank in Europe, and we want to continue and to improve our footprint in Europe. And for Germany, it's the heart of the economy in Europe. That's why we want to invest not only in retail banking, but generally we have strong objectives in Germany, for example, for the mid-corporate, for the large corporate, also for CACIB. The mid-corporate, we want to enter in this new and to tap in the new market for us in Germany, and obviously in the retail bank, because we have already 1 million clients in Germany, and we want to make it more profitable in order to offer new products and the capacity of the group, and it's our universal banking. For the saving and capital union, maybe you can add something, Jerome, and I answer.
No, of course, this savings and investment union is a topic that we follow a lot. It certainly would be an accelerator for different businesses for us, be it Amundi, be it also CACIB, of course. It doesn't have a lot to do with the initiative that was presented regarding Germany, because clearly what we're talking about in Germany is much more collecting savings from individuals, and so it's not so much related to the savings and investment union.
Okay, for Italy, as I said before in my speech, we are obviously very attentive in what happens in the future. We are waiting for a proposal from BPM, because I think a merger between BPM and Crédit Agricole Italy make a lot of sense, make a lot of synergies, but this project is not on track. We are waiting for a proposal. In any case, our branch or a division in Italy is going to solve. We want to keep. That's why we have defined a project of organic growth, because anyway we are waiting for that. Maybe one day it will happen, but today it's not on track, and we want to organize to define our organic growth.
Thank you. Jeremy Siggy from BNP Paribas. Over here.
Yeah.
Thank you. Just continuing that discussion, you talked about Germany, but I wanted to broaden it a bit to the European digital savings offering and also the European digital professional proposition. Two questions on those. Could you talk about the rhythm of launches in different markets that you have in mind? And then linked to that, what do you lead with as you launch those services? Are you leading on pricing? Do you think you've got better technology, different packages of services? How do you take market share in those quite competitive markets?
Yes, it's a mix of all these items, of the elements. You have to be obviously very efficient in terms of price, but also with our digital expertise. We have built with Before Bank an IT platform, an European IT platform capable of opening, for example, an account in every country in Europe, and a very scalable IT platform with the capacity to handle IBAN in different countries. That's why we have to launch that in Germany. And obviously, with our digital expertise, with our price, the capacity of every business line to offer the best of the products in Germany, we are very confident to succeed. Wait and see. And for the pace, we are ready to launch, but I can give the floor to Stéphane, our platform in 2026 for the savings. And the IT platform of Before Bank will be ready at the end of 2026. And obviously, we are waiting for that. But maybe we can add some comments.
Perhaps two comments on your questions. Thank you for your questions. First, our customer target in Germany will be a more affluent customer, because if we see what we have done without a great speaking in Germany, we have now 400,000 clients and saving and deposit. It represents 15 billion euro, and it's affluent customers, 30,000 euros each. So our customer vision is to give confidence to the customer, because we are Crédit Agricole, and we want to take these clients and make upsell, cross-sell with other product, financial offer with Amundi or with other produce factories, but also other product as mobility services, etc., etc. We have to make a large base of of clients, and unify, because we have this customer in a different part in our company in Germany. But if we make this, it will be if we will make this, it will be very rich for us. And we will extend with platform, digital platform. First is saving and deposit, more industrial than the one we have now. We will add Before Bank tools, because for the everyday banking, it's a very good tools. And also we want to launch a digital platform for professional and next for agricultural clients. We will make this in 8 countries, the platform, the different platforms, saving, professional, agricultural, in 8 countries until the end of the plan. And we will consolidate in some countries, first Germany, but certainly after in 2 or 3 other countries where Crédit Agricole have a strong presence. So it's a double approach: launch of a platform digital platform for saving, for deposit, for professional, for agricultural, and in some country we aggregate our model to a universal bank. But it's a new way, it's a modern way, because as you see, acquisition of a large universal bank in Europe, it's not so easy. And partnership will have limits, so we will take care of all opportunities, but we want to make organic growth with our starting point, and we have, as I have shown to you before, we have a large presence in Europe.
Okay.
Thank you.
Hi.
Hi.
Jacques Agricole, Kepler Chevreux. I have one question really, which is linked to that. It's the first time in the 4 plans we have that many developments on the regions and the countries. It's very interesting because you have indeed a very decentralized model.
Yeah.
So how do we reconcile that? Because, you know, a lot of people are going to have to work together, which do not necessarily work together. The LCL, CIB in particular is quite interesting. So maybe a little bit of telling us how you're going to effectively make that operate. And then, Clotilde, how much of that 3.5% combined revenue do you think you can actually attribute to that? Is it like 0.2, 0.3? Just to have a little bit of an idea. Thank you.
Yeah, it's the second pillar of transformation is one of the goals is to work together better than before, because we have strong business line, very efficient, very decentralized, but we have to progress in terms of capacity to work together. I take an example from the mid-cap, for example. We can add the know-how of CACIB in terms of defense, agro-business, or technology or energy, obviously. And we want to take this know-how and to develop that with LCL, because LCL have a big strong trip, a big know-how also for the mid-cap market. And together we can build something in the European area. But we could take many examples of that. And that's one of the goals of the team, of the executive committee. It's my job, obviously, to work together and to impulse something new in the way to work collectively. Second question is for
the revenue growth. So we have a contribution of all of the businesses of this revenue to this revenue group of 3.5%. More of it will come from outside of France. Within France, we're around 2% of growth of revenues in France. But we have not, we don't provide any decomposition of the contribution of the, for example, German or mid-cap initiatives, because in fact, all of these initiatives are going to feed into the growth of the different businesses. For the mid-caps, we have LCL, we have CACIB, but we also have mobility solutions, leasing solutions. For all of the solutions that Stéphane was talking about, it feeds into Crédit Plus, but also to leasing and factoring. So it's really a collective effort, and so that's why the contribution of all of these businesses will be strong to this effort, to this international effort.
Thank you.
Hi, Matt Clark at Mediobanca. So some more questions on BIFA Bank and these initiatives. Firstly, historically, you've tended to use legal entities for your product factories. So am I right to think that the BIFA Bank initiative will be in the BIFA Bank legal entity as it is, and you will operate branches in each of the markets that you're expanding to? If that makes sense, firstly as a question, or if not, how from a legal entity perspective are you going to be operating? And then secondly, you've talked a lot about savings and investments, I guess deposit gathering, but not so much about the lending side of it. So for BIFA Bank and to some extent for the savings and investment platform, is there an intention to be lending on the other side of the balance sheet here, and what products, and to keep pace or not? What are you going to do with all these deposits you're gathering?
You can, and I had some comments. You can start, Jérôme.
The first point, what Stéphane said was that we intended to use the IT platform of BIFA Bank in different countries, because this platform is going to be very soon now completely up to date and is going to be able to operate with a multi-IBAN setup. So it's not certain that we need to use the legal entity before bank, but we will need definitely to use the IT platform. And we have some legal entities already present in Germany, for example, so it's not a necessity for us to add up another legal entity in Germany. So this decision is not made yet, but definitely what is important for the project is to have access to the IT platform. Then when it comes to the business model that we see for Before Bank, it's much more going to be targeting savings of the customers. So lending is not something that we want to avoid, but definitely what is important for us is to collect savings, and this is where we think we can make a difference.
Just I can add one comment on your question. We want to use in Germany the Credit Plus franchise. They have already 20 branches in all the main city in Germany. They have 1 million customers in saving and in consumer loans, and we want to increase our footprint on the clients to propose them all the products we are capable of offering. That's the model. And as you say, legal entities, we don't know at this point if it's with Credit Plus, with the SFS subsidiary, or we have to create something, we don't know, but we have a bank license and so on, and we are capable of doing that.
Maybe on the growth of outstanding loans, it's going to be a little bit different according to the different businesses. For example, if I take the example of French retail, we have the outstandings that are going to grow very close to that of the economic activity in France. A little bit more in Crédit Agricole Italia, and we're going to have a stronger growth in outstandings, for example, for SFS. But it's true that for the Savings and Investment Union, we have the branch of the savings, the leg of the savings, and we also have the leg of the outstandings. And that's where CACIB also, in the target that we have to increase revenues strongly with a balanced mix between financing activities and market activities, these financing activities with the strengths of CACIB in real asset financing, infrastructure, shipping, all of this is the loan leg of the Savings and Investment Union, and CACIB really wants to be a strong player in developing this, in particular, strategic autonomy of Europe.
Thank you. Hi, Ian Lapey, Gabelli Funds. Thank you for doing this presentation. My question is on private credit and the decision to expand there. I'm sure you've heard in the US a lot of issues with bankruptcies and frauds. Are you not seeing that in Europe? And will the expansion put pressure on the 40 basis point cost of risk target? Thanks.
No, we don't think that we are going to take this type of risks. Actually, what we are seeing is some individual topics in the US, and we are fully aware of what has been announced in the last several weeks regarding some difficulties with some names. But definitely, first, our role is much more going to be at the initiative, at the origination of private credit, much more than directly investing ourselves. And then when it comes to what we are going to propose to our clients with, amongst other examples, the agreement with ICG, this is precisely the reason why we wanted to engage with the most important and the most respected player in this space in Europe, because we think that, like in every business, it's important to play with the most important player.
Hello, Flora Bocahu from Barclays. I'm here.
Yeah.
I'd like to ask you a question on the revenue growth target, because, you know, in the past you've been able to grow at 5% or more the last few years, And here in this plan, you're basically telling us you're going to grow in line with the nominal GDP, if I look at the assumptions you made in the plan, and that despite rates that you think will slightly increase and despite a growth in the customer base and in the product range that you offer to these customers. So just curious to understand, first of all, why the caution may be in the revenue targets that you set here in light of the environment. And the second question is on the Italian earnings, because I think you're saying you're going to go to 20% of group earnings in Italy. And I think that compares to 15% today. So why do you think you're going to grow in Italy faster than elsewhere, especially as this is an organic-only target, if I understood correctly?
Yes, because for a growth of our revenues, it's only an organic growth. And if you assess the last decade of the growth of revenues of Crédit Agricole SA, we have a part, 1/3, I think, having that in mind, due to the external growth. And we don't want to integrate in our plan an operation of an M&A. We will see that in the future. It depends on the opportunities and if it makes sense, if we can create synergy, etc., etc. That's why 3.5, it's a little bit than we have already done in the past. Yeah. And we are confident to ensure that.
Maybe just with the 3.5, we also have, if we break down a little bit by business line, you have a couple businesses, for example, Crédit Agricole Italia and CACEIS, where we were at a high point in 2024 in terms of net interest income. And of course, you've heard about Amundi that integrates the uncertainty, of course, linked to the UniCredit partnership in the target that Amundi is taking into account. So if you break this up and if you integrate this dimension of organic growth, you'll see that our 3% minimum is very ambitious.
And maybe regarding what you asked on Italy and the fact that the proportion of our net income coming from Italy is going to grow from 15 to 20%, part of the increase is linked to the fact that starting in 2026, we are going to recognize the equity contribution of BPM as a component of our Italian results, which is obviously the case.
Okay.
Yes, hello. Good morning.
Where are you? Okay.
Stefan Staumann from Autonomous. Thanks for taking my questions. I wanted to get back to what you said, Clotilde, on the 2% revenue growth target in France. You're also targeting 3.5% to 4% in LCL. So it does seem as if you're not expecting much growth in the other French businesses. Is that just conservative planning, or is it some reason for that? And the second question relates to, I think, Jérôme may have mentioned it, regarding the output floor. I appreciate that that's not binding for CASA, but I guess when the group starts to mitigate, that some of the mitigation may have to be absorbed by CASA. Could you maybe talk about how you look at that?
Maybe just on the revenue growth, around 2% in France. Indeed, we have a growth which is between 3% and 4% for LCL. We have other businesses that are also going to contribute to the growth in France. I'm thinking about CACIB in particular and Crédit Agricole Assurance. The contribution of for example, Amundi and Indosuez will be a little bit lower because they're going to expand more internationally. And of course, you also have to take into account the evolution of the corporate center, with the participation of Banco BPM that can increase and become international. So that's also one of the reasons why we have revenue in France, which is about 2%.
When it comes to the output floor and the mitigation that we can foresee in order to reduce a little bit the impact of this output floor, you perfectly know that what is going to bite at group level for the output floor full ramp up in between 2029 and 2032 is going to be the proportion of home loans that sit within our balance sheet, especially within the regional banks. So definitely what we have to work on is how we can improve the way we structure those loans and the way we organize things in order to reduce the impact of the output floor. So I don't know, as of now, if some elements or not are going to bite at Crédit Agricole SA level, but first, it's not going to be before 2028 or 2029. And second, the bulk of the issue for us comes with the home loans.
Just maybe add a comment on your capital position, because we have a lot of questions about that. I confirm that we haven't any interest at the CASA level, of maintaining a CET1 ratio significantly above 11%. And the market, in fact, actually has the best of the both worlds. You have a limited ratio at the level Crédit Agricole SA, and for the markets, you have a good return on tangible equity, 14s, maybe more if we can. And you have a free guarantee from the regional bank for the group level with 70.5% of CET1 ratio at the group level. I repeat, we haven't any interest to keep to have too much capital. And this case, and if we do less acquisition, we hope in the future, I'm sure that we are confident on the capacity to provide to the market at the end of the plan an exceptional dividend in case of too much structural capital at the level of Crédit Agricole SA. I want to add that because we have a lot of questions in distance for this question.
Ici.
Other
good afternoon.
Other question?
It's Chris Hallam here from Goldman Sachs at the back.
Yeah.
So I just had a couple of questions. First on CACIB, and it's a bit of a follow-up to the earlier question. You have a revenue target of 6% for Europe ex-France. I just wondered if you could spend a bit of time talking about CACIB in France in particular, particularly considering the context of the other 40, how that will play out. And then second, at the beginning, Olivier, you were very clear that you don't intend or wish to sell the stake in Banco BPM for cash. I just wondered whether you would consider selling part of that stake or exchanging part of that stake if that were necessary to facilitate a combination, considering where the percentage aggregate ownership may end up if you didn't move on the 20% prior to a combination. Thank you.
Maybe on this one, I think you misunderstood what Olivier was saying. Olivier was saying that we do not intend to sell Crédit Agricole Italy for cash. Because we've seen in the press some news related to the possibility that we were ready to contribute Crédit Agricole Italy in exchange for elements which are cash or cash related. We didn't talk about the stake, and we're happy with the fact that we hold this stake. We are here and we are organizing ourselves to stay in the long run as the first actually shareholder of Banco BPM. This is the reason why we want to equity account this stake. And so, of course, there's no point in thinking of selling this stake for cash.
It's a no-brainer.
Even though this is a stake that has a price that is far below the price that we see on the market as of today.
On CACIB topic, maybe you can answer, Jean-François.
Thank you. In France, I mean, naturally, the French market is quite well developed, but we have a very strong position in France. We've been developing our activity in the various businesses for quite a while, and there is still room to grow. If you look at where, we are mentioning our strengths in real assets. There is a lot of investments to take place still in energy transition, but also in the tech sector, in the telecom sector, and we are big players there, so we can help. There is also the development on the FI side, which is continuing. So we have a broad range of possibilities. What we've seen on the previous medium-term plan is that part of our growth also is by generating new additional revenues with existing clients, which is very important. So we will continue that way.
Thank you. Okay.
Oui.
Ah, let's go.
Bonjour, Pierre Chilville, CIC. D'abord un point sur l'assurance. Dans le précédent plan, au niveau du dommage particulier... Ah pardon, c'est en français. Sorry.
I know you perfectly. I know you prefer to speak in French. The same for me.
My brain is French, sorry. So in PNC, in the previous plan, you had an objective of plus 2.5 million contracts. And you did, even if you don't communicate a lot on that, but according to my calculation, you did also 1.7 million contracts. So I was a little bit curious to know, why do you plan this time 3 million contracts? Because you did not exactly say where do you think you are going to make this contract, and why are you going to make twice better than in the previous plan on this. And also in insurance, I remember that Philippe Brassac was very keen on developing SMEs insurance business. At that time, you had a target of revenues of 1.5 billion euros, and you don't say a word on that part of the business in this plan. So I was curious to know if you gave up this ambition.
No.
And I remember that at that time, AXA France said to me, you will see they will give up within 3 years. So maybe it's the case. Regarding consumer credit and mobility, I'm also a little bit surprised by your target of RON. Not surprised, because we all know that it's a difficult time for this type of business.
Yeah.
But when I look at some of your competitors regarding these two types of businesses, mobility and consumer finance, they plan to recover a little bit stronger than you, let's say around 12 to 13%, which is a round that is covering the cost of equity at the end of the day in this kind of business. So I was wondering, why are you so conservative from your part? And at the end of the day, when do you think that you will cover the cost of equity, which is clearly not 10% in that kind of risky business? And my last question will be a subsidiary questions regarding Caisse Régionale, which is your main distributor, I would say.
Yeah.
We have seen a significant deterioration of our cost-income ratio these last 4 years. Of course, margin has its part on that, but certainly other things, maybe you can tell us. And what would be your objectives regarding this cost income? I think that currently today they are around 62%. They were around 53, 55. So what is your view on that, and can it have any impact regarding their capacity to sell your products? Thank you.
Okay, thank you for your food question. I give the floor, and I can add many comments on that. But to start with Nicolas, Denis.
We start in English, if I may. So the first question was about the 3 million contract in 2028. So it's in fact 1 million in net contracts more, and it's not only in France, it's in France and abroad. As you probably know, we have now a very successful subsidiary with Abanca, a JV in Spain. We have also successful subsidiary in Portugal, Mudum, and we launched motor insurance in Portugal this year, and it's also quite successful. So that's why we aim 26% of growth of the portfolio of PNC contracts in France and in Europe. The second question was about SME.
In Italy.
And in Italy, of course. And in Italy, we have the JV with Banco BPM, and it's roughly 500 million euros in terms of premiums. The second question is about SMEs. And 1.5 billion during these 3 years. When we call of integrated SME business for insurance. We are speaking about what we call in France assurance collective, so employee benefit, retirement, health, and protection insurance, and also of P&C and SMEs, so both of these two business lines. And we are very successful in both business lines. First, in retirement, health, and protection, we are one of the leaders in retirement in France. And we want to enter the 10th ranking in France in this business line because we have a very attractive model of bank assurance integrated with the regional banks and also with LCL. And we have a very good synergy with Amundi. And for P&C SME in France, we launched it in 2020 with a very smooth launch, very prudent launch, and we accelerate this year, and we will accelerate in the next 3 years.
Thank you for the return for the SFS division.
Yeah, we don't usually comment on what our competitors do, but it's true that it's not necessarily the same method when we calculate the RONE for our competitors and ourselves, if we take into account the geographical mix or the mix in personal finance between revolving or not, or even methodological differences. In particular, for example, some of our competitors take into account minority shareholders, whereas we don't. So that creates a difference between the RONEs that we calculate and the RONEs that others calculate. Now, our trajectory is based upon ambitious targets in terms of growth in a context that's still uncertain, in particular regarding mobility. But there's also an optimization of the expenses and the resources, and the cost-to-income ratio of CAPFM, which is already very low, continues to decrease in this medium-term plan. So we're quite confident as to the fact that we're going to reach this RONE level of 10%. And of course, as you know, we never reason in terms of some of the parts at Crédit Agricole, because each of the businesses also contribute to the growth of the others in a logic of generating synergies. So Crédit Agricole PFM is very important for our whole setup.
Concerning, now we have a last question concerning the cost-income ratio for the regional banks. Maybe I give the floor to Gerald to comment that.
It's quite easy because in the context of a medium-term plan of Crédit Agricole SA, I don't have any information to communicate about the cost-income ratio of the Caisse Régionale. However, I can confirm the full commitment of the team here present to support the business of the regional banks. That's clear. And this is a notion presented of a business partner. And I also confirm you the full commitment of the regional banks to improve their performance and more specifically their cost-income ratio.
Thank you. And in our transformation, the second pillar of our plan, we have associated regional banks in order to optimize processes and expenses for all over the group, even the regional banks. And that's a key point for the future and for regional banks.
Hi, it's Joe Dickerson from Jefferies. Just a couple of quick questions. Firstly, on your portfolio of businesses that are in Asia, if you were to put those businesses together, what type of RONE would they be earning? And then I guess secondly, on the Asia business, it's pretty clear who you compete with. If you look at the league tables, who you compete with in the CIB side, if you were to look at the wealth side, geographically, it sounds like you're really focused on Southeast Asia. I guess what's the competition? Is this, ultra high net worth, more the mass affluent? It seems like it's kind of the former. So there's some discussion around the Asian portfolio and wealth. And then on the cost walk, where you've got the 1.8 billion euros of investment, I guess how much of that is that primarily associated with France? And among that, would that be investing in digital, or is it more pan-European? Thanks.
Thanks on the RONE question, which is a tough one. But nevertheless, if we consider that the businesses that are going to develop quite strongly in Asia are Amundi, CACIB, and Indosuez. And if you look at our RONE targets for the asset gathering division and large customers division, you'll see that these businesses are very, very accretive for our setup. And it's also logical that this would be the case also in Asia, because since we're going into Asia also to capitalize on all of the development of savings, liquidity in that region, all of these elements are drivers of accretive growth. So it's really something that's going to contribute positively.
I want to just add that we have a very strong brand in Asia, very attractive brand in Asia. Maybe the geopolitical landscape at the moment, Americas and so on, you know the environment. We found that we have a very strong brand and very attractive. That's why we make business, for example, in India with Amundi, but we want to develop that with the other business line. And for us, it's a key area for our growth in the future, not only for the 3 next years, but for the years to come. Yeah.
Yes, hi. Good morning, Giulia Miotto, Morgan Stanley.
Morning.
Thank you for taking my questions. I have 2. I'll go back to the BPM comment that you made, that you're waiting for a proposal. Why waiting, not making a proposal? So what would be your ideal solution there? And then secondly, there is a need in Europe for more investment. So I'm surprised why in Germany you're leading with the savings product. So is the vision to start with a savings account and then convert the people to more more investments? Or I don't know, unit-linked products, or you just stop at the savings product? Thank you.
On the first topic, we are an happy shareholder at the moment with 20% of the stake. And if we haven't any proposal, okay, we are waiting. And we are cautious, and we are patient. And we build today with BPM many contracts in insurance, in consumer loan, and maybe we have other ways to build something together. But we are prudent and cautious and patient, and we are waiting the moment. But it's BPM. They have the end. They have the end to build something, and we are waiting for that. Second question, for Germany, for saving?
For savings, maybe just a question. Indeed, we are targeting savings of individuals, of households in the different European countries. This is the goal of this platform that has been presented by Stefan during the presentation. Then, of course, what we intend to do is to be able to propose to use these savings under the form of different products, be it products proposed by Amundi, be it products proposed by our insurance subsidiaries, or be it other type of products. And of course, this is going to participate to this movement that we think is useful for Europe, which is progressively to channel the savings of the household towards more, I would say, a little bit risky, but more useful investment financing for the development of the European economy.
Clotilde?
Cécile.
Cécile, at distance.
Yes, we have received a few questions via the chat. The first one will be, in fact, a summary of several questions that we have received on the interim dividend. So, and the question is, can you give an indication of the potential interim dividend split for 2026 in relation to both H1 net profit and the expected full year 2026 dividend? In fact, the question is more explanations on what are the modalities.
Okay, I give the floor to Clotilde.
So we're going to pay in the second half of 2026 an interim dividend based upon the income of the first half, i.e. June 2026. We're going to provide you details soon regarding the modalities of this distribution, but it will be consistent with our wider distribution policy, which is a distribution of 50%. And then we're going to remain prudent within this interim dividend policy, but consistently with our yearly policy.
Okay. Next question is about ESG. I'm looking at Eric, maybe. Do you plan to have your trajectory validated by SBTi? This is just.
I give the floor to Eric.
Yes, one answer is the fact that we have been working with SBTi for a long time, I guess since 2016, and we have a status of committed in SBTi. This means that we're working with SBTi in order to be acknowledged in the climate strategy of the group.
Thank you.
Okay, we have another one on the evolution of earnings, the 8.5 billion guidance for 2028. How much comes from the contribution of Banco BPM? Maybe some explanations.
So, as you know, we integrated pro forma the fact that we're going to equity account the contribution of Banco BPM for 20.1% starting normally on the fourth quarter of 2025. And so this creates a contribution of about a little bit more than 400 million euros, which is about 5% of the net income growth share.
But we have to also mention the fact that in the basis of comparison, so the restated 2024 figure, there is already this equity contribution. So don't imagine that out of the 25% increase of the net profit at CASA between 24 and 28, 5 points are going to come simply from the fact that we are going to equity account BPM. It's already there in the pro forma of 24. It's going to increase a little bit accordingly to the official plans published by BPM up to 2028. That's all.
Okay. Next question is about the CCI. Why, at today's Capital Market Day, did you not propose any concrete solution for the CCI shareholders of the 13 regional banks still listed?
Okay, it's not my role as a deputy, as the CEO of Crédit Agricole SA to comment the situation of CCI of the regional banks. And secondly, as you know, we have legal action ongoing at the moment, and it's obviously impossible for us to comment with these ongoing actions.
One question on French retail and NII, net interest income. Can you elaborate on LCL net interest income growth? What are the main key drivers here?
Okay, I give the floor to Serge Magdelaine, CEO of LCL.
Okay, let me just step back to the NBI growth, because we are quite confident the LCL NBI will grow by 3.5-3.8% during the period, driven by growth of margin, intermediation margin, and the drivers are volumes. The volumes are outstanding. We are expected a very dynamic production of loans, and the renewing of our outstanding credits with better margins due to interest rate curves than the loans that are extinguishing.
Okay, thank you.
And the last question will be about Worldline. Could you elaborate on your plan about Worldline? Is your investment mark to market in your accounts or depreciated? What is your average purchasing price? But the question is about Worldline globally.
Worldline, we have a specialist for Worldline. It's Jerome.
Actually, we took a stake in the capital of Worldline back in 2023 at a moment where we were just finalizing a contract with Worldline, an industrial partnership, which is very important for the development of our services to merchants. And Worldline was at that time announcing that it was going to get rid of part of its German merchant portfolio in order to comply with BaFin requests. And the share price of Worldline declined suddenly, and we found out that it was at the same time a risk for the partnership that we have with Worldline and an opportunity to enter into the capital, because with the previous share price, we felt it was a little bit too demanding. Then Worldline has been engaging into a very profound restructuration. We support this restructuration. We support the efforts of the management to refocus its business on two main divisions, which is financial services, services that actually are sold to banks mostly in Europe, not very much in France, but mostly in other European countries, and then merchant services, which is clearly the division in which we have this very important partnership that was mentioned earlier in the presentation, Cole. So this restructuration of Worldline is quite demanding, as I said, because it's going to imply a certain level of investment, IT investment, in order to merge a number of platforms. It also implies the divestiture of certain businesses with so the reduction of the EBITDA that was coming from these businesses. And so Worldline communicated back 2 weeks ago on its new medium-term plan with, in addition to that, the announcement that it was raising additional capital. We've decided to support the capital raise alongside with two other important French banks, BPI and BNP. And there's nothing more to say. We support the plan, we support the transformation, and we support the capital increase in its two legs. That's all. And we are quite confident this is going to work out. And we are also very positive on the partnership that we've built with them.
Thank you, Jérôme. Thank you, Cécile. Thank you for the team.
Yes.
You have to conclude now.
Yes, I have to conclude, and so as we are coming to the end of this session now. So I want to thank you all for being with us today. We truly appreciate your time and participation throughout this Investor Day. Before we conclude, let me share what's next. In the coming months, we will host a series of 4 workshops, each dedicated to one of our key business lines. So LCL, insurance, CIB, and personal finance and mobility. We will host 1 workshop per semester, starting in H1 2026. And they will provide an opportunity to explore each area in greater depth and continue the discussion. We'll share all the details with you well in advance. Thank you once again for joining us today. We look forward to seeing you at these upcoming workshops, and have an excellent day.
Thank you very much. Thank you, Cécile, and the team for the organization of this event. Thank you very much.